And we're live. Hello and welcome to the Crypto Beat, where we discuss what's happening right now in the crypto space. My name is Tim Copeland. I'm the editor-in-chief of The Block, and I have here with me Eden Yeager, CEO and co-founder of BitcoinOS, and Francesca Conti, Bitcoin Accelerator Lead at Outlier Ventures. How are you doing?
Doing well. Thank you for having me, Tim.
Yeah, I'm looking forward to the conversation.
Awesome. Now, before we get started, I'd like to mention The Block is hosting its first ever crypto event. It's called Emergence. It's taking place in Prague in December, and it's going to be a fantastic event. You don't want to miss out. Head to emergence.xyz and use the code TheCryptoBeat, all one word, lowercase, for 20% off. Now, the focus of today's episode is on the Bitcoin DeFi space. And we're going to start with you, Diego. What is Bitcoin DeFi? Like, what does that even mean?
Well, Bitcoin is an asset which was designed and I think gets all of its value from the fact that you can actually directly own it and you can use it without any intermediaries. And we're, about 15 years into this Bitcoin adventure. And the list of things that you can truly do with Bitcoin without any intermediaries or middlemen is quite short, right? You can hold it, you can transfer it. That's basically the entire list of things. And that's a little bit remarkable because if the purpose of the asset is to remove your dependence on intermediaries, then if you want to be able to actually utilize BTC for anything, you find that you're blocked from that. And so there's been a movement, and I think it's been going with growing strength over the last few years to build out those tools, products, technologies, which are going to allow for BTC and more broadly the Bitcoin chain itself to be utilized without intermediaries. And so BTC is one asset, but we're starting to see a flourishing of new assets that are using, the world's most well-trusted, most secure chain as their um, registry of record.
Okay, and what parts of DeFi are coming to the Bitcoin space? Is it lending, dexes, staking? Like, is it everything?
Well, I think you've basically just described all of DeFi. So if you boil down what DeFi is, effectively it comes down to um, just a few basic things that you can do. One is the ability to trade. The other is the ability to borrow and lend. You combine those two and you get the ability to trade on leverage. And then to utilize these assets for staking or voting and things like that. Effectively, we're seeing all of these use cases coming to Bitcoin. Um, I have been involved with a project called Sovereign. Sovereign was probably the first mover in the Bitcoin DeFi space and is today the largest DeFi ecosystem project for Bitcoin. And that's exactly what um, Sovereign allows. So trading, margin trading, borrowing and lending, and then the ability to stake to earn BTC, so additional forms of BTC yield. And then perhaps the most interesting use case for me is the ability to borrow against your Bitcoin in such a way that you're issuing Bitcoin-backed stablecoins, which I think gives Bitcoin, if we think about Bitcoin as digital gold, then we need to have a currency which is backed by that gold, and stable coins backed by Bitcoin are that currency.
Yep. Okay. And then how does it work? Because with like Ethereum, it's sort of natively designed to support DeFi. It's all pretty straightforward. You have smart contracts. You sort of code what you want. With Bitcoin, you don't really have the same infrastructure. So how is it possible to do all these things on Bitcoin?
So up until now, up until quite recently, it's been a matter of compromise. So people have been building, and and this includes the project that I've been working on, Sovereign, um, have been building tools on systems like sidechains, which maybe are merge mined with Bitcoin and allow you to have sort of bridges with multiple federation members. Um, And so it's along the path towards decentralization, along the path towards censorship resistance, but it's not quite there. And it's certainly not giving you the full degree of Bitcoin security and the full ability to get rid of intermediaries. So um, there's been, I think, a limit to how many people are interested in that particular compromise. If you're already going to make a compromise, then some people have chosen, and in fact, larger amounts of BTC and users have gone to centralized alternatives. This ended up quite poorly. So BlockFi and Celsius and led a whole bunch of other projects went bankrupt, providing these borrowing and lending tools on Bitcoin. A whole bunch of exchanges like FTX and many others have taken people's Bitcoin with them. And so Bitcoin and the financialization of Bitcoin have been in limbo. The free market being able to be built around Bitcoin has been limited. But now what we're seeing is a huge change in what the technology allows. And the primary reason for this change is advances in the ability to use zero knowledge proofs. So actually you took the example of Ethereum, right? Ethereum, as it stands today, it is very straightforward, but it doesn't work, right? So you've got this chain, it's vertically integrated with all of the data that you might want to store for these transactions, and all of the smart contracts and all of the assets that get issued. Everything gets issued on the chain, including the EVM, like the Solidity smart contracting language is written hard-coded into the chain. And what even 4 years ago Ethereum discovered was that this doesn't work. You cannot scale a decentralized system in this way. It very quickly starts to fall apart. And so what we've seen with Ethereum is this move towards rollups. What are rollups? Rollups are these environments, effectively like new chains. But instead of having their own consensus mechanism, what they do is they compile all of the transactions that occur into a type of cryptographic proof called a zero knowledge proof. And then they write that zero knowledge proof to Ethereum. And the reason they're using zero knowledge proofs is one of the interesting features of zero knowledge is it's succinct, or it can be used for compressing data and also deterministically proving data, because you don't need to have all of the knowledge of everything that's happening on the roll-up in Ethereum. And so in doing this, what you actually have is you have sort of this mothership of Ethereum and then all of these other chains that are writing their transactions to Ethereum through zero knowledge proofs. And so this is for Ethereum a way of scaling. Now I think that that is an extremely important thing, right? This is an entirely new type of cryptography that is being used in an industrial manner to bring new possibilities in terms of the security to Ethereum. But there's still sort of a primitive way in which it's being done, which is you just sort of like copy paste Ethereum into a new chain, you put your smart contracts on the new chain, and now you're writing those transactions to Ethereum. The reality of zero knowledge proofs is that it's a much more powerful technology than that. It allows you to effectively take any kind of computation and write it to a chain, securing and executing that computation on the chain in which you write it. And that effectively means that you could potentially have infinite scalability and infinite speed. Now, the key thing that's happening is that while those techniques were pioneered on Ethereum, they are now migrating to Bitcoin. And Bitcoin, it turns out, is actually in many ways a much better chain for this, because Bitcoin is a much more limited chain. It doesn't try to do all of the things that Ethereum is trying to do, and actually today turn out to be unnecessary because they can now be done off-chain. And so Bitcoin is a thinner, more lightweight, and more reliable chain. And with the ability to start writing compute, performing compute off-chain, turning it into a ZK proof and writing it to Bitcoin, you now have the ability to perform any compute, secure it with Bitcoin, and execute on Bitcoin. So you can move BTC, you can issue new tokens on Bitcoin, you can bridge in and out, you can create private transactions, and really the list of potential things is literally endless. There's, imagination is the only limit. So we're seeing a restructuring of the entire crypto space, where sort of layer one chains in many ways are losing their importance. They are being unbundled, and more and more activity is starting to migrate off-chain. With Ethereum, it's currently 80% of the activity occurs off-chain in these various rollups. With Bitcoin, the percentage is still much smaller. But what this does, and what this has opened up, is the path for Bitcoin to become a hub for all of this DeFi activity, as well as much more, Web3 and anything else you can imagine, for the first time, truly trustlessly, using the Bitcoin chain as the security layer.
Yep. Okay. Now, with that in mind, like Francesca, what are you seeing in terms of within the accelerator program, in terms of people building various solutions using the sort of zero knowledge technology and the security of Bitcoin? Like, are people experimenting quite heavily with what you can do with that?
Yeah, absolutely. So Yago said it very well. It's almost as though ETH walks so Bitcoin could run, so to speak. So we're seeing a lot of use cases developing through the rise of Bitcoin and also the interest. I mean, we saw that very much with the spot ETF. So users have access to Bitcoin, making it much more accessible. Undisputedly, Bitcoin is the OG of the system, and now we've seen with composability and scalability new use cases following, so that being DeFi, real world assets, digital assets, consumer economy, creator economy. The list is really endless. So very much in our focus within Outlier Ventures, we've been investing in the space for the last 18 months, and very much the rise of ordinals and ruins. So ordinals being something along the lines of, think of an NFT for Bitcoin, or ruin stablecoin is really a core focus for us, and we've continued through those investments. So very much in the verticals in infrastructure, mining, DeFi, and asset issuance, we've seen multiple use cases that have really flourished in the meantime. So a perfect example of this is I had worked with a company called Takanos, which essentially, if you think of Fiverr or another freelancer platform, it's based in Argentina, allowing freelancers to be paid in stable and paid in Bitcoin. They just marked a major partnership with MasterCard. So we're seeing more and more of these use cases coming to fruition in reality. So it's no longer something of just a hypothetical. We're really seeing cases evolve on the ground. Of course, with that being said, DeFi is probably the most notable use case, and we're really seeing advancements there. And as Yago mentioned, L2 activity has skyrocketed in the last few months, certainly with scalability and finding creative solutions to further enhance the Bitcoin ecosystem that plays into that. So a key example of this is I was in Nashville for Bitcoin 2024. BitLayer was very much the belle of the ball. They raised over 100 million at a 300 million valuation, I believe. So we're very much seeing more and more individuals play into this narrative that Bitcoin is not just a holder place for people to store their digital gold, so to speak, even though 99% of individuals are still considering holding onto their Bitcoin. So in terms of what we're seeing, zero knowledge proofs, definitely we're assessing projects in that sphere, if you will. Very much, I think, Tim, what is also extremely interesting is where these builders are and where they're located, what they're building. So very much we're seeing in Southeast Asia, ordinals and ruins are still playing a key central theme, so assessing projects in that region. Certainly, I work with a lot of Latin American founders, which DeFi is really for them a do or die situation. So the severity of it and the use cases that evolve there are very much beyond just the fluff we've maybe seen in past years and coming to fruition in reality. So a lot of excitement in the space, and certainly many more use cases evolving based on this improved technology and, of course, uptick in interest.
Okay, now, what do you think are the biggest investing opportunities within the Bitcoin DeFi space?
Lending and borrowing, I would say, is definitely something we're seeing at the forefront. And in terms of DeFi use cases, and another example I'd like to point towards is I had worked with a founder who created Sati, which is essentially sending your Bitcoin via WhatsApp, which sounds pretty, let's say, basic, but the intuitiveness of the founders really speaks tenfold, because for these individuals to be able to send and receive Bitcoin on something as easily accessible as WhatsApp further drives the narrative of the need there. I mean, certainly we're seeing more and more use cases develop in terms of stablecoins and what that looks like. According to A16Z, stablecoin usage actually was twofold compared to Visa in Q2 of this year, and is moved in 3.2 trillion to date. So very much playing into the stablecoin narrative, and what will transpire there is, I've seen a few projects that are particularly exciting to us. So once I'm able to share that we're working with them, I will do so.
Cool. And I had a thought. Yes, sorry, go for it.
Yeah, so on that, I think one, in terms of investing, the one primary asset, or possibly the primary asset that's going to benefit from this, is BTC itself.
Right.
So Bitcoin has been, since the beginning, the number one asset in the space by a very wide margin. One of the remarkable things about Bitcoin is that if you take Ethereum and Solana and all of the other chains and all of the DeFi projects that are built on them and all of the tokens that are built on them and all of the meme coins that are built on them, etc., and you add them all together, they still represent only a fraction of BTC's value. So there's a huge network effect and a huge asset pool which hasn't been unleashed yet in Bitcoin. If you imagine Bitcoin DeFi growing to similar proportions as sort of DeFi and Ethereum, we're talking about a DeFi ecosystem which is easily 4 or 5 times the size. So we can expect to see a very significant ecosystem for the first time, like a free market paired with the free money that is Bitcoin growing around Bitcoin. This will strengthen Bitcoin's network effects even further. It will introduce new ways to use Bitcoin, so Bitcoin is going to become far more useful as an asset. And what we can also probably expect to see is there's going to be sort of, it's like Bitcoin has entered the chat, right? So, there's been this battle between Ethereum and Solana and Cardano and Avalanche, etc. But suddenly a beast far larger than any of them is entering into the smart contract space, and now they're all competing against Bitcoin on that field as well. And so we can expect some of the capital there, some of the mind share, some of the devs to start migrating into Bitcoin. It's sort of like the biggest blue ocean opportunity that's that is suddenly opened up for developers. I agree that DeFi is likely to be the first set of applications that are going to be valuable. But I think that there's going to be a period now, and we've seen this happen several times in crypto before, where there's going to be a significant need for deep tech and infrastructure being built around this, which is going to facilitate all of this, because these tools effectively do not yet exist for Bitcoin. And so I think one place to look, if you're interested in sort of what is likely to be in 2025 and in the years beyond, a primary point of growth, it's infrastructure around Bitcoin, Bitcoin layer 2s, and Bitcoin ZK.
Iago, also something that I just want to backtrack, because I think you brought up a very interesting point, is just the builder mentality in this space. It was very humbling to me when I started investing and speaking with projects in the Bitcoin ecosystem, because very much these founders are not novices. A lot of these people have been around for quite some time, that are really deeply involved and passionate about the space. You're not finding just devs that are trying to latch onto projects, because we've seen that doesn't work. So very much the need to have individuals that have a deep understanding of the technology at hand, that have the wherewithal to put up with the patience of evolving technology around the ecosystem. And I think very much Sovereign comes to mind, in BitcoinOS as well. So really looking forward to seeing what you're building with that.
I mean, right now, Bitcoin is probably the fastest growing ecosystem in terms of devs. And the two primary places that I'm seeing them, Francesca, is Web 2 entrepreneurs, or entrepreneurs who have already made it in Web 2, and builders and developers from actually primarily Ethereum more than any other ecosystem.
Yes, I would agree. But we also know that what works for Ethereum doesn't necessarily work for Bitcoin. So that's also a key learning taking away some of those tools, technologies, and devs, but also not becoming copycats. And that's something that I feel a little cynical towards, that I've seen a lot of copycat projects that developers and founders feel, okay, if it works for ETH, it will work for Bitcoin. Not necessarily. Different ethos, different type of builder, different type of environment in which individuals thrive in, but important nonetheless.
Yeah. Now, Jaeger, you brought up the idea of like sort of value flowing back to Bitcoin. I wanted to ask sort of more on the technical side, and this sort of relates to where the ZK proofs are put on the Bitcoin network. But with Ethereum, sort of previously when we had like layer 2 networks, everything sort of ended up using up sort of costing ETH on the sort of main network. That which something that helped to drive up the price of ETH. Now, ever since sort of blobs, it's now super cheap for rollups to put data onto the mainnet, and therefore you've lost that sort of force that could have potentially driven up Ethereum's price. Now, if there's a large sort of Bitcoin DeFi ecosystem, can you explain whether or not it has any impact in terms of pure demand for Bitcoin, just in terms of like the infrastructure supporting the layers, like just is there a cost or requirement for layer 2s, or is there no sort of direct impact in that regard because it's sort of, I don't know, just stored in like, I don't know, like an OP return or something within Bitcoin?
Well, I don't think that the fees that people are going to be paying are going to be a primary driver of accrual of value for BTC. That's not to say that there are not going to be significant fees. Bitcoin has only 4 megabytes of data space every 10 minutes. That's very, very little. And each of these execution layers, rollups, bridging environments, tokens, all of these activities, we've already seen sort of prototypes of this in runes and ordinals. They've significantly driven up the demand for BTC, for Bitcoin block space, and have introduced much higher transaction costs. I think that's going to continue and accelerate. And so there's actually going to be more and more demand to use Bitcoin layer 2 environments, because the cost of transacting on Bitcoin mainnet is going to continue to rise as more and more demand occurs. And so you get this vicious cycle that as more people are using layer 2s, more and more people will have to use layer 2s, because mainnet becomes this more expensive settlement layer. What I do think is going to happen is that Bitcoin block space is going to rapidly become the most scarce digital asset out there, and Bitcoin miners are going to be the primary beneficiaries of that. Although we will all benefit from the fact that this is going to substantially increase Bitcoin's security budget. And so a lot of people have been sort of wringing their hands. What happens when the block subsidy decreases again and again and again in the halvings? Will there be a way to sustain Bitcoin security? And I think the answer is very definitively going to be yes, and it's because Bitcoin is going to become a settlement layer for many, many tens of thousands, hundreds of thousands of all kinds of transactions. So you will need BTC in order to pay these transactions, but I don't think that's going to be the primary driver of BTC demand. The primary driver of BTC demand will continue to be the fact that it's this pristine asset, but now that you can more securely do many more things, like earning yield, like borrowing against it, like lending, and also the fact that you can lend against your Bitcoin, or borrow, I should say, against your Bitcoin, means you probably never need to sell it. We can all become like Michael Saylor. So I think it's going to be very exciting for Bitcoin, and the price will rise, but not directly because of the fees.
Iago, I'd love to touch upon just something you mentioned, because I know you quoted mining, and like, of course, mining at Outlier Ventures, we're working with earlier stage companies, so pre-seed to Series A, but mining, I mean, for later stage investment funds, that's ringing true. 5 names, I think, raised over $1 billion between February and June of this year. So as I meet more and more founders, mining is something that we did invest in some projects in the first Bitcoin cohorts, and are still assessing a potential few in the upcoming, but that's not something to sleep on, right? Even the conversations DeFi within Bitcoin, mining still plays a huge role in what that looks like. So something very much top of mind as well.
Sure. And do you think that Bitcoin needs Bitcoin DeFi to survive in the long term then?
I don't think it needs it to survive. I think that for
Or maybe to
Bitcoin to,
thrive?
I think for Bitcoin to achieve the full extent of what is possible, right? Which is more than just being. So digital gold, I see as sort of step one, and in and of itself, it's a remarkable achievement. But it is just sort of like the narrowest of use cases that we can do with decentralized financial assets that we can utilize Bitcoin for. Bitcoin creates an entirely new way of thinking about property rights, an entirely new way of thinking about settlement of transactions, an entirely new way of thinking about how people can directly manage their assets. And it's invented this entire space. And what we've seen is a huge, just stable coins and DeFi and DAOs and digital art. There's a constantly growing set of use cases that people are using these technologies for. What's special about Bitcoin as a chain rather than BTC, the asset, is that Bitcoin is unchanging. And when you think about the system that you want in order to manage property rights, you want a system which is unchanging, a system which is more than just unchanging, is unmanipulable, cannot be changed. If you look at Solana, if you look at Ethereum, they have timeframes of maybe 6 months between fork, between the system. In Solana, the system will actually stop working on occasion. That is not good for a system which is supposed to manage people's most valuable assets. Bitcoin is the only system which has placed such a premium on becoming this unchanging system. And when you think about most of finance, right, not the 1% of gambling and speculation and Ponzinomics that crypto represents, but the 99%, which is mortgages, inheritance, savings accounts, large-scale infrastructure projects, bonds, securities, right? The vast majority of finance is extremely long term. Mortgages are 30-year things. Bonds are held for 20 or 30 years. Infrastructure projects have payback periods of sometimes 50 years or more. Inheritance is something you do over generations. And so we actually need something new, something which doesn't look like software, but looks like what I would call permaware, a system, a digital system for a digital world, which is as reliable as hardware or as a law of nature. And really only Bitcoin provides that. And so while over the next few years, I think the primary influx is going to be from BTC, which is currently sitting dormant, into Bitcoin DeFi, and developers, liquidity, and users from the rest of the crypto space into the Bitcoin ecosystem. Ultimately, I think that Bitcoin is the missing link, and Bitcoin programmability is the missing link to actually starting to bring traditional finance, real world assets, tokenization writ large to fruition. And I'll just say we've often said it's like all of crypto is just speculation and gambling, and that's true. But I think it's because of the infrastructure we've had. You cannot build something which isn't a casino on something which has only 6 months or 3 years of a time frame that you can plan for. You need to be able to plan for many, many decades if you're going to be building real finance. And so the fact that we can finally bring programmability to Bitcoin, a system which does think in the terms of generation, is, I think, the missing link that it will allow us to start onboarding real financial activity.
And there's a
Do,
reason why when Larry Fink talks about crypto, he talks about Bitcoin, right? And there's a reason why with this upcoming US election, Bitcoin is on the ballot, so to speak. So it's very much, we're seeing this permeate into current events as well. So it's no longer this dichotomy between Bitcoin users, BTC asset, and the rest of Web3. I mean, very much we're seeing it married in traditional finance, evaluating opportunities that are sound within institutions and in governments as well.
do people still care about DeFi when meme coins are the talk of the town? Like, you know, everyone's focusing on meme coins. people are either making or losing a lot of money. DeFi had a lot of attention early this year. Does it still is it still capturing that same interest overall?
Well, I think, people, you can say that meme coins are capturing all of the attention. They still represent a very, very, very small percentage of the overall capital, even in the crypto space. And I think it goes to what I was saying earlier about gambling. I think part of the problem is we haven't built the infrastructure in crypto. We haven't built the infrastructure for um, significant financial activity. And so we've been stuck with gambling. And now sort of people are thinking, well, if we're stuck with gambling, may as well just do meme coins. I think another part of the problem is we've started to see over the last 4 or 5 years, and certainly since the peak of sort of the crypto free market, which was the ICO market, we've seen most investors, what people usually call retail, squeezed out of the opportunity to participate in projects early on. BitLayer raising 100 million before they have the technology to achieve what they would like to achieve at a 300 million valuation means that they're going to launch at a billion-dollar or multi-billion-dollar valuation with a relatively small amount of the tokens actually available to the public, and then more and more tokens will unlock over time, and very often, and what we frequently see is sort of tokens becoming down only, and this has also had an impact where it's robbed people of the faith that even, if the project is good, can they profitably invest in it? And so that's another thing that's pushing people to meme coins. But perhaps the most important thing about meme coins is, to a great extent, they're sort of weapons of mass distraction, right? You hear 10 times or 100 times more about meme coins than you do about a lot of the other stuff, which represents, even within the crypto space itself, 90% of the activity and the value. So I think what we're seeing with meme coins is a repeat of NFT mania that we saw in the last bull run. We're at the beginning of a bull run now, like the significant part of the bull run. Memes are the NFTs of this cycle. Everyone is excited about them and willing to talk about them because they think they can do 100x or 1000x. Most people will lose money. It's basically a lottery. Next cycle will invent some other kind of mass madness. But in the meantime, crypto goes on.
Cool. And for Jessica, how big do you think the Bitcoin DeFi ecosystem can get?
I think it's only here on up, right? We're just seeing it, we were seeing it at precipice. And then as Iago was mentioning, I mean, certainly from an investment valuation point and being on the ground, I'm seeing more and more projects feeling very emboldened with extremely high valuations with maybe not so much to show for it, but that doesn't mean that the stamina will not continue. I think very much as we've collectively agreed, DeFi is probably the most interesting and most useful utility on Bitcoin or within the ecosystem as well. So I feel we're going to see many more use cases developing out of that. Again, as we were discussing earlier, like emerging markets playing a big role in that, seeing where that materialize, certainly identifying opportunities within Latin America, within Africa as well. So in terms of the usage or personal usage, consumer usage, that is something that is very much going to be a driving force. And again, we see that with borrowing, lending, yield, the possibilities are endless. So maybe just to backtrack a little bit, Tim, your question with Iago, I don't feel Bitcoin needs DeFi to survive, but DeFi definitely holds a great place, and we certainly saw that very much in our first thesis. And then upon revision of doubling down with asset issuance and DeFi, those are the two focal points which we'll continue to assess opportunities within.
Awesome. And Diego, what's the biggest challenge of building DeFi on Bitcoin?
Well, it remains, in my view, I think just not just in my view, I think it's pretty clear that the primary challenge remains the infrastructure, right? So Bitcoin itself is not designed to do all of these things. I think very, very wisely, Bitcoin is designed as as a thin, simple system. And so there remains the necessity to be able to build systems which can perform this compute, verify and execute that compute in Bitcoin, and then be able to do it in such a way that all of these different systems and applications built on Bitcoin are interoperable. So, I'm wearing the hat of BitcoinOS. One of the reasons I started working on BitcoinOS is because I've been working in Bitcoin DeFi long enough to know, now maybe longer than anyone else, long enough to know that we've seen sort of 10 years of infrastructure developments in the wider crypto space that have yet to come to Bitcoin. And in many ways, I think that was also the most profitable place to be working and investing. The holy grail right now is being able to build the systems that will allow people to perform DeFi and other kinds of applications off-chain and secure them on-chain. That is what BitcoinOS is doing. Right now, BitcoinOS is the only project which has managed to verify ZK proofs in Bitcoin. We've, as a result, there's over 100 rollup projects out there. There are multiple other layer one chains out there, many DeFi projects out there that are announcing partnerships with us, or that they're going to be using our technology, because this is the holy grail. If you can fix this, everything we've sort of been talking about now, and all of these hundreds of projects that have been sort of building Bitcoin DeFi have been limited by this fundamental technological problem. And now we're on the precipice, already have solved part of it, on the precipice of solving the rest of it. And so, my commitment is that we solve all of the stuff in time for this to be the biggest story of 2025.
Awesome. And to wrap things up, I want to hear from both of you on this, but what's next for the Bitcoin DeFi space?
Yago, do you want it? Since you're a builder in the space, do you
No,
want to
Francesca, I think you should go first, because I need to gather my thoughts.
Okay. So in terms of what is next for the DeFi space and what we're seeing there, certainly more consumer peer-to-peer applications. I think that very much rings true, and what we're going to see, permissionless activity to send and receive BTC in a meaningful way, and that's accurately captured. I feel as though, especially with the last 18 months, we've seen such an uptick of users and people who are actively engaged in the space. I mean, recently there was a report that found there's 220 million active wallets a month. So that's just like continuing with this theme, as we're saying, DeFi is the holy grail, so to speak, the focal point that we're going to continue seeing moving further. And then in terms of what I'm particularly interested in, I think the creator economy is a great take on what can be developing in the Bitcoin ecosystem. As we discussed, it touches upon a lot of different applications, not only on DeFi, but on real world assets, tokenized assets as well, and bringing things into a full encompassing picture. But as Yago had mentioned, we really need the infrastructure to be building these sound tooling mechanisms to thrive in a way. And cash is king, money is all. DeFi is representative of that in the digital asset space. So very much need to continue to see this uptick of mature developers and builders. And again, with the usage of like composability and scalability, and combining the renewed sense of technology and wherewithal within the Bitcoin ecosystem, DeFi is only here on up. So as an investor, I'm very excited for the future of that, and assessing projects that are a good fit within Outlier Ventures.
So I'm not an investor, so I'll talk about it more from my builder's perspective. And for me, the easiest thing is to say, when I look at the market, I'm looking at what does the market want, what does the market need right now, and how can we provide it. So in terms of what we're looking to build and what we are building out, actually before even sort of what so the overall Bitcoin builder ecosystem right now is focused on rollups, on DeFi applications built on those rollups, and on Bitcoin staking. I think the most important use case there is Bitcoin yield. People want to be able to start earning yield, earning more Bitcoin with their Bitcoin. Um, I, what that has done is it's created now about 100 rollup projects that are waiting to become Bitcoin rollups and don't have the base technology. Our goal is to make sure that those 100 projects become, before the middle of next year, actual Bitcoin rollup projects. Um, that is going to be the kickoff for a massive growth in that entire ecosystem. Um, and um, some of the other things which I think we're going to start seeing, we've already seen a number of important, so ordinals, BRC20s, runes, early sort of prototypes for token standards on Bitcoin, but still quite limited. We're going to start seeing programmable tokens becoming available on Bitcoin. That is going to open up a whole new swath of use cases, and um, we will begin to see a migration of people from sort of Bitcoin mainnet into these ecosystems as transactions on Bitcoin mainnet become much more expensive. And I think one other important use case, which I'm expecting to see quite soon, is Bitcoin-backed stablecoins. It's one of the easiest ways to sort of
Yeah.
wrap the existing value that is sort of held in BTC and make it useful in the real world. And there's strong demand for that. We released an early prototype of a Bitcoin-backed stablecoin product last year, and the demand was so great that we had to shut the project, the product. We had to shut down issuance because we couldn't supply as many tokens or stablecoins as we were. So I think those are the places that I would be looking in terms of what's likely to be the big moves in this upcoming year for Bitcoin.
Interesting. Do you think companies like Tether will will start getting involved in that kind of thing? With those sort of Bitcoin-backed stablecoin. If you think the market's there.
I wouldn't be surprised.
Well,
I
the
don't know.
Tether.
I feel differently.
So I mean, Tether are in a few days hosting a conference in Lugano, Switzerland. Um, and it's a Bitcoin conference. Tether as a company is extremely Bitcoin focused. They currently use their profits from Tether to purchase Bitcoin. I think they will continue to want to hold treasuries as the primary backing for USDT, if for no other reason than this gives them leverage over the US government. They are now probably the largest private holder of US treasuries in the world, larger than most countries. But what we are seeing is that the capital from there is flowing into Bitcoin anyway, because they're just taking those profits and turning them into Bitcoin. And I think they're going to probably, in the background, and this is what I'm already starting to see efforts from them to A, bring Tether to Bitcoin mainnet, and B, support efforts to build Bitcoin-backed stablecoins.
All right, that'll be an interesting space to watch. And that's all we have for today. I want to thank Diego and Francesca for joining. And make sure to give us a like and subscribe on YouTube or Twitch. And we have a 20% discount code for emergence using the code TheCryptoBeat. And make sure to read the blog, stay informed on everything crypto. Thank you, and see you next time.
Thank you,
Thanks
Tim.
very much, Tim and Francesca. Thank you.
Thank you, Jaco, as well.
All right, we're offline. And I
Cool.
managed to end